Hi there, ZIM has reported the results for the second quarter. Despite a loss in their revenue and earnings, as you can see, Google Finance says that ZIM is paying a dividend over 100% and the PE ratio is around 0.5. So this looks amazing. But the reality is not that great. So in this video we'll find out the outlook of ZIM and at the end its fair value. Because at the current market cap, around 1.5 billion, the stock price may rebound. So let's begin. In this image you can see the analyst estimates and the past numbers. I don't know if you know the story of ZIM, but last year in 2022 and 2021, ZIM made over 4 billion in earnings and over 5 billion in free cash flow. And of course the revenue was over 10 billion. That happened because freight rates were quite high because of the pandemic. But as you can see, analysts expect lower revenue in the future, around 5 billion, and their earnings to be with minus, plus their free cash flow to be around 400 million. And what you see on Google Finance, this low PE ratio and this huge dividend, are from the past numbers from 2022. Moreover, the dividend has been cut in the first quarter. In 2022 they paid $27 per share, so that was amazing. In 2023 they paid around $6 per share, but for the next years, dividend is expected to be zero. And also for this year, the $6.40 per share has been paid. Now, the results weren't that great. However, the volume was about the same, so no change there. But the big change came in the freight rates. They have declined by over 60%, and of course also the revenue by over 60%. As you've seen, the freight rates have declined a lot, from 5,000 to 1,200. And that's why you see this decline in their numbers. Also, their free cash flow has decreased by 1.3 billion, plus their total debt is around 4.8 billion. They have 3.2 billion in cash, so the net debt is around 1.6 billion. And compare that to the market cap, around 1.5 billion, is about the same. You can see better in this image that the freight rates have declined from 3.5 thousand to 1.1 thousand. And their operating income was with minus, a loss of 160 million. And their guidance for the entire year, 2023, is that they expect in earnings before interest and taxes to have a loss between 500 and 100 million. Be aware that this is EBIT, so their final earnings will be even lower. Plus, they expect lower volume and no improvements in the freight rates. So these freight rates are expected to be low for this year, and based on the analyst estimates, lower for a longer time. Now, you might say that you can rely on their assets, but you have to understand how their business works. They rent more than 90% of their fleet, and ZIM owns just a few vessels, and that's why you can rely on their assets. They are written as assets, but in fact they are liabilities, so you have to be aware of that. And their business model is like this. They make around 1,200 per transport, as the freight rates are around this level, but as they rent most of their fleet, they also have to pay the rent or charter rates. And as you can see, the charter rates are around 1,100. So they make 1,200 and they have to pay 1,100. Plus you add the expenses and ZIM is left with almost nothing. That's why they expect a loss around 500 million for this year, 2023. So everything depends on freight rates plus charter rates. If freight rates go higher and charter rates remain low, then ZIM will make a profit and the stock price will go up. But if freight rates go down or stay around this level, then ZIM makes no money and they won't pay any dividend. However, if they make some money, they become profitable, then their dividend policy remains unchanged. They'll distribute between 40 and 50% of their net income as a dividend to shareholders. So if freight rates go up, then you may expect a dividend, as they'll make more money. But we have to be aware that this business is not that profitable. As you can see, rates weren't that high in the past. They went up because of the pandemic, but that doesn't happen every year. So rates are expected to be low for a long time. Now, if you want to value this business, you can't use their earnings because the estimates are with minus. can try to value this business based on the revenue, especially what the analysts expect. So let's see the fair value. First, the risk. If rates stay around this level or go down even more, then the fair value will be around 1 billion or 900 million. So you can still see another decline in the stock price from the current level, the market cap to go to 1 billion. That can happen if rates go down even more. Of course, if charter rates go up and freight rates go down, that will be even worse. So this is the risk I see. The market cap may go down to 1 billion. Now the reward, the gray scenario, if rates improve, they go up, then the market cap can go to 5 billion. And at the current level of 1.5 billion, you can easily more than double your money. But be aware that this depends on the freight rates, if they go up. And the normal case, where rates may improve a little and ZIM will be able to make a profit, the fair value may be around 3.7 billion. So the current market cap, you can expect a double. But don't forget that this is a risky business. They also have some debt, and this industry, the shipping industry, is not that profitable. The freight rates are expected to be low and stay low for a long time. So ZIM is not a great investment, even though the stock price has declined by over 80%. However, if you do want to invest in this company, it's better to focus on the risk. You might make some profits by buying low and selling when the stock price is high. But don't buy when the market cap is around 1 billion. Buy with a margin of safety if you really want to invest in this company. From my point of view, ZIM is a risky investment, not because they don't have good management, but because of the industry they operate in. Everything depends on the freight rates and charter rates. If ZIM doesn't make a profit, the stock price will stay low for a long time. Moreover, all governments want the shipping rates to be low, in order to promote the trade and grow their economies. So this is the risk I see with ZIM. And if you have any questions, please let me know in the comments.